A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a surprising turn of events this morning, President Donald Trump has reignited trade tensions with a bold announcement of potential tariffs that sent shockwaves through the financial markets. The president's latest threats include a staggering 50% duty on goods imported from the European Union and a 25% tariff on Apple products unless the tech giant shifts its iPhone manufacturing back to the United States. This declaration comes as a stark reminder of Trump's ongoing commitment to using tariffs as a tool for economic policy, despite previous rollbacks following his much-publicized Liberation Day speech in April. Trump took to Truth Social to communicate his expectations directly to Apple CEO Tim Cook, stating, "I have long ago informed Tim Cook of Apple that I expect their iPhones that will be sold in the United States of America will be manufactured and built in the United States, not India or anyplace else. If that is not the case, a tariff of at least 25% must be paid by Apple to the U.S. Thank you for your attention to this matter." The president's comments reflect a growing concern over Apple's decision to increase production in India, a move aimed at mitigating the impact of high tariffs imposed on goods from China. In a subsequent post, Trump voiced his frustrations with the European Union, accusing it of exploiting the United States in trade matters. He stated, "The European Union, which was formed for the primary purpose of taking advantage of the United States on trade, has been very difficult to deal with. Their powerful trade barriers, VAT taxes, ridiculous corporate penalties, non-monetary trade barriers, monetary manipulations, unfair and unjustified lawsuits against American companies, and more, have led to a trade deficit with the U.S. of more than $250 million a year, a number which is totally unacceptable. Our discussions with them are going nowhere. Therefore, I am recommending a straight 50% tariff on the European Union, starting on June 1st, 2025. There is no tariff if the product is built or manufactured in the United States. Thank you for your attention to this matter." These remarks have had immediate repercussions on Wall Street, with the Dow Jones Industrial Average plunging 458 points, or 1.1%, and the S&P 500 declining by 1.2%. The tech-heavy Nasdaq index fell by 1.6%, while shares of Apple dipped nearly 3% at the onset of trading. European stocks mirrored this decline, with the Stoxx Europe 600 index dropping close to 2%. Economists have long noted that Trump's tariff policies have a significant impact on market performance. Justin Wolfers, a professor at the University of Michigan, noted on social media, "The single most reliable economic fact of the Trump presidency is that when he raises tariffs, markets tank. When he backs off, they rise. This matters because markets are assessing the future profitability of American business, and any tariffs benefits are downstream of boosting profitability." In April, after announcing a series of tariffs that led to a market crash, Trump had paused the implementation of these tariffs to allow for negotiations. However, the current threats indicate a return to a more aggressive stance. The U.S. has maintained a 145% tariff on Chinese goods, effectively halting trade, while recent negotiations have resulted in a temporary pause in the trade war. Treasury Secretary Scott Bessent's discussions with Chinese officials earlier this month yielded an agreement to suspend the trade war for 3 months, but tensions remain high. Trump has also suggested imposing a 100% tariff on films produced overseas, although the White House has since clarified that no decision has been finalized regarding these tariffs. The market's reaction to Trump's announcement today has erased some of the gains made in recent weeks following the rollback of certain tariffs. Notably, Trump's previous exemptions for phones, computers, and chips from the reciprocal tariffs imposed on China had provided some relief to investors. However, the potential for new tariffs has led to renewed fears of economic instability. Consumers are already feeling the pinch, with major retailers, including Nike, Target, Walmart, and Best Buy, warning of potential price increases due to tariff pressures. The Yale Budget Lab recently reported that consumers are facing the highest overall average effective tariff rate since 1934. As the situation unfolds, the uncertainty surrounding trade negotiations and tariff policies continues to loom large over the markets. Trump's administration has been actively seeking to negotiate lower rates with various countries, but progress with the European Union appears stagnant, prompting the president's latest threats. As discussions between Trump's team and international leaders continue, The markets will be closely watching for any developments that could signal a change in the current trajectory of trade relations. With the looming threat of tariffs and the ongoing complexities of international trade, the economic landscape remains precarious. Investors, consumers, and businesses alike are left to navigate the uncertain waters of Trump's trade policies, as the implications of these tariffs could have far-reaching consequences for the U.S. economy and beyond. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.